Jumping right into Alcoa, a good old aluminum play. And this is a very big cap stock in terms of the aluminum space. So it's one that it's very liquid, lots of volume, decent amount of shares always being traded. But it has been a powerhouse nonetheless. And we are shorting it with members. We issued a short alert yesterday right at this green line here, 97.40-ish, and we're already in the money. It had a massive drop, and you can see how this bullish reversal candle gave you a clear indication that the price was heading lower. But keeping in mind that this is a powerhouse play, it's part of the commodity boom and repricing that is occurring right now, plus it is also affected with exports from Ukraine and Russia being aluminum, which there's been supply constraints certainly for aluminum, with Russia no longer exporting certain raw materials and commodities. And as we look at this price action, Alcoa can certainly trend higher. It does have a lot of buyers and momentum behind its name. I do think it heads much lower. If you look at this reversal candle here and look at this reversal candle here, they're very relative in size. 6 million shares traded here and 12 million shares traded there. So you can see that we've kind of been running out of momentum after we got this final surge. And often when you make a new high, interim high, you'll have a retrace and you'll make a new high, but it won't be as powerful. You start to run out of momentum, and that's what we're seeing here. And if you look at what type of resistance we're running into, this yellow trend line across, it connects the 22 pivot high, which we just happened yesterday. It connects the 2008 pivot resistance, which I'll take you on a chart, and it connects a 2000 pivot resistance. So when you have three long-term trend lines for a total of 22 years, you're naturally going to respect that point of resistance in terms of price action. So let's go to the weekly chart, and that's why we started accumulating a short with members. So if we go to the weekly chart, look at this huge base that we put in. They're breaking out. We're trading almost near the all-time highs for Alcoa, which makes sense with what's happening in the world in Ukraine. But look at these resistance points. You have these tails here, these tails here, this pivot here. Amazing price action. And then you have the all-time high in 2007. But when you calculate the move, this is a fully measured move, overbought. RSI is trading way too overbought. If we look at the monthly chart, this thing has just gone parabolic straight up. Extremely overbought on a monthly basis. Let's in fact look at the RSI. I don't pay attention to the RSI as a factor alone, but it just solidifies how overbought something. So looking at the RSI here, and we'll make it a bit bigger, look at this price action. This is all of Alcoa's price actions going back to the 70. It's never been more overbought on the RSI other than this point in time by a substantial margin. And this is a monthly basis. This is not short-term price analysis that we're looking at. Yes, we're looking at the short-term to capitalize on the best possible price action, but we're doing long-term analysis incorporating with our short-term trades to give us high probability outcomes. Where do I expect Alcoa to go? Well, if you do a measured move from here to here, it roughly puts you on the same percentage basis if you fill this gap on the chart. I do think Alcoa has to cleanse, go all the way down to this 200-day where you'll most likely find support in and around this pivot high zone. Let me just make that trend line a little darker. I do think you find support in there ultimately when the 200 comes up. But again, if there's some sort of resolution with Ukraine and Russia, then ultimately this stock goes lower because more aluminum supply comes on board. Okay, so just keep that in mind. There's a lot of stocks hitting major resistance. There's a lot of stocks hitting short-term overbought levels and long-term overbought levels, and it leads to think that there's going to be some sort of, not a full maybe truce agreement, but maybe a small portion of demilitarizing certain zones, and each side kind of giving and taking to some of the demands, whether it's Ukraine finally saying they're not going to join NATO and the EU, and then perhaps Putin agreeing to withdraw some troops to maybe a more heavily dominated Ukraine city, where the majority of the population doesn't want the Russian army in there. Because when you think about what territories Putin has taken over, if you look at how he has strategically moved his armies to take over cities, he's gone all the way to the northern parts of Ukraine, but he's kept along the borders of Russia, very close to his Russia. So in a way, he has taken over a lot of Russian Ukraine territories that are actually dominated by Russian influence and presence. That being said, it doesn't give any country the right to start moving in on someone's land, certainly with violence and war and casualties at bay. But strategically looking at this, there has to be some sort of give and take in this scenario, because when both sides continue to escalate, there's never a good outcome. So some sort of resolutions, and now that each side has faced many casualties and lots of destruction, lots of wealth destruction, you name it. There's countless consequences that have occurred. So there's bound to be some sort of pressure on each side to find some sort of common ground. And that's why a lot of these plays, I believe, will eventually come back down. And if it doesn't happen on the back of the news, it could happen on the back of the Fed hiking, liquidity coming out of the market. Who knows what it is, but a lot of these are extremely overdone